Quick introduction to Chapter 3, which is dealing with customers. I've got the home page up. Once again, you can see that these are all the transactions that relate to customers. We could also get to the same spot from using the customer in the drop-down menu. You can see there's create invoices, create estimates, sales orders, all those same items in this window are in the drop-down. One of the things I'd like to point out is when you're doing your reading, also on page 76, which opens the chapter, there's a visualization. Remember, the visualization relates to the help menu. You do the help, learning center tutorials. There's chapter 3 relates to the tracking money, sales overview, building block of sales. You could watch these tutorials for a little further information. But what we're going to deal with in chapter 3 is customers. And from the customer, say the customer center here, you can see that we have all the customers. We can pull up anyone in here, say Becky Todd, and under all transactions, we'll filter it by maybe all year. Oops, excuse me. We'll put all years or all the transactions in there. So then now bring up all the transactions that we have with Becky Todd. From this menu, you can also, from the Customer Information Center, you can go up to new transactions, and from new transactions you could create an invoice or sales receipt. Also from customers, create invoice. Where is it in here? Create sales receipt. The important thing to remember about this customer center, or say, I should probably say sales, is that when you're dealing with these customers, two things you need to remember are that creating an invoice is basically creating a receivable. Anytime you invoice somebody, you're going to have a debit to accounts receivable and a credit to sales. Anytime you create a sales receipt, you can basically consider that cash and carry or a cash sale. And that's another reason why you have a sales receipt. It's asking you right away, is it cash, check, debit, e-check, more. It's asking you because it's basically a cash and carry or a sale on the spot. As opposed to an invoice, you're going to generate an invoice and later on you'll receive payment for it. One of the key items, whether you're dealing with a invoice or a sales receipt, would be this column called items. Items, you can also get to them in this drop-down list. Items are the things that you are selling. It's a quick way to enter something on an invoice. Let's pick up surgery, for example, here. Surgery, anytime I tap on the surgery item, it's going to give me a basic surgical procedure as a description. It's going to post it to a service, and it's going to be, the account it's going to is fee for service income. We can confirm that by going down here to the item, and we can either create a new one. In this case, we want to edit it so that we can look at it. We can see that it's a service. This is the type. The name is surgery. You can set a rate for any item that you might be invoicing. I mean, if we're always going to charge $125 for surgery, we can put $125 here. And then this is the account it goes to. You can see that it goes to fee for service income in our chart of accounts. Now, what we're going to do is, that's one of the nice things about QuickBooks, we can pull up, say, Amy Anderson, her dog Sinbad, and then we are going to invoice her. We'll go back down here to surgery. Surgery, she's going to have, let's say, one surgery, and it's basic surgical procedure. We can type in behind it to, let's say, extract. Of course, I'm going to pull a big name. Oops. Extract a tooth. It's $125. But we could also, too, I mean, say the dog bit us while we were extracting the tooth. I can change this to $200 because I was bitten. It's going to ask me now if I want to change that price level. If I change this to 200 here, it'll go back in and automatically change every time we bring up surgery to $200. I don't want to do that. I want it just to be $200 for this instance. And you'll see that 200 is our total invoice. And I can just keep going through. Annual exam, 2 of those. We'll go next item, ears, 2 of those. And you see how it just keeps totaling. We have 2 ear cleaning, 25 bucks, 50. Annual exam, 2 of those at $25, 50. So our total invoice is $300. If I do a save and close now, it's going to do an automatic spell check on me, which I'm going to tell it to ignore all. But now that invoice is sitting out there. So if I wanted to, for example, now I'm going to receive payments, because remember, the invoice basically debits accounts receivable, and I've got an invoice from Amy Anderson for dog Sinbad. There's our $300 invoice coming in. We receive a payment of $300 on it, and she's going to give us a check, and the check number is 12345. And now we have, you can see that the amount due is 300, amount applied 300. She has 0 left to pay us. Save and close. And another unique thing about QuickBooks is that anytime we receive payments, I'm going to go from go to reports, company financial, balance sheet standard. You'll see that that $300 is in undeposited funds. Anytime we receive funds until we deposit them, they go in a other current asset called undeposited funds. So what we will do now is we are going to, well, let's go to the home page. Do we have the home page open? Yep. We'll go to the home page and we'll record a deposit using record deposits. There it is. This is the deposit that we had received. We want to make a deposit. Okay. Subtotals. Save, close. Now let's go back and look at our balance sheet. We need to refresh it. QuickBooks generally will always ask you if you want to refresh your report. And now you see that the $300 moved from undeposited funds into our actual checking account. So that is a quick little rundown about receiving payments. Customer entering sales receipt works the exact same way. If we did the same thing with Sinbad, again, cash, we're going to do a cash sale of a surgery, this time quantity 1, and another $300. Let's delete that. 300. Save, close. Report needs to be refreshed. Now you see that our cash sale is sitting in undeposited, and our accounts receivable before that we collected of 300, probably a bad idea to use 300 and 300, but is already in checking. So if we wanted to put our cash sale into checking, we would have to record a deposit. Yes. Okay. Save, close. Go back to our balance sheet. We're going to need to refresh it. Yes. And now you see we have $600 in checking. So that's just a quick little show of the customers you'll be working with in this section.